Welcome to TradeTheNBI.com. This is John. This report is for the 16th. Well, it was quite a weekend with the whole Saudi Arabia oil disaster situation, attack from Iran. So back on that war footing again. And that's really not caused as dramatic a move as some would have expected from that. Certainly it's going to impact oil a little bit more, but maybe to a lesser degree since, as we've discussed, the ability for the U.S. to sort of turn on the spigot makes an enormous difference. Otherwise, this would have been a major disruption. Whether it will create further tensions or not remains to be seen. That is a definite market risk that's outside of the normal parameters for, well, what you would typically look at. The earliest you're going to see it is just in the behavior of the indicators, and obviously we can see even from a daily standpoint, we already had the crossover, steel below. We were looking for some modest weakness, and sure enough, that's done it. And it actually went a little bit below the ABM, maybe because of the nature of the situation. But there's certainly weaker readings, and that started all the way back from Friday. So it's not a surprise where we're at from there. And even that Friday finished lower as it did. So none of that's overwhelming. Doesn't help when you have sell signal along with bad news that only compounds itself. Same thing with NASDAQ, and it's actually below the, right at 76%. So its dip is a little bit more significant as far as a ratio standpoint. Euro pulling back a little bit from the euphoria of limited QE from the EU. It's going to have a tough time. I mean, central banks are going to be able to pump this back up. They're just hoping they can find a stabilization point. Hasn't happened just yet. From an oil standpoint, okay, so we're looking lower here. That's going to spike up a bit. Already it looked like it was gaining some support off of the rising steel that we had seen just from Friday, net off of the earlier dip because we were still within a range. We'll just move it outside the range. We're looking at 1250 range. That's going to put us at the high side right back up here to where the peak was. But, you still have to get all the way up to the 1260 range. It's very close to that to be at the high of this medium-term range. Once you get beyond that, then you might be moving into a category where they're concerned about how long it will take for Saudi Arabia to get back up to speed. And that will potentially have a significant, because it's such an abrupt spike so quickly, what it will do to gas prices in the U.S. immediately, or even just from a midterm range, and whether that will cause a mid-spike in gasoline prices and result in some inflation, which we just haven't seen significant amounts of, at least the reported kind. We know that it exists within food and other areas, but those aren't counted. But that would be something that I think the market is really going to be looking at the geopolitical situation and whether or not you have a better chance of conflict, because that will certainly create a much bigger dynamic than any of the other supply issues, which don't seem to be all that great an issue for the U.S. From a gold standpoint, it's certainly going to help lift gold back of it, because anytime there's fear and turmoil, people are always going to go to the metals, and it had already done its little retrace. From an intraday standpoint, it was sort of flat, modest in between. Then we started to catch some sell signals a little bit later on. We weren't getting dips below the red line, so there was always a weak DOC going on. And then we had the steel crossing below, green going below red, and then the orange spike. And that led to actually the most significant decline we had. Then we ended up with blue candle here, but didn't get the dip of orange all the way below, and there was no reset of red. So what I kind of refer to those as a weak long, soft long, if you want to call it. So I usually want to look for an improved red DOC from a previous pivot. And when it had that opportunity on the low dip, it really didn't do a whole lot. And so by the time you got the orange dip that did come in, it was very short-lived, hit the 50%, and pretty much cyan green met, rejected, and then you get the full crossover there with steel. Red came down, whether it was the bar before this final bar when the magenta shakeout, which is what these little dots represent, stopped rising at all. That began the end, and that was towards the end of the day Friday. So being short from that. Led to the open where it was there, and then we ended up with a little bit of a buy signal. It was right down here this morning. It was under the 94, which we were looking for from a retrace that we had from a couple days back that finally just filled back in. What a shock there, right? And this was pretty decent because not only did you have a little previous pivot right there that you had exceeded with the red DOC, it was a nice swoop move coming from underneath and no dip below the red line that had to be filled, so it had the potential for some positive momentum. Has it gone all that far? It's not really that many points, but the close was from 89, and we went all the way up to 99, so it was almost 99. I believe it was a little shy of that. Yeah, 99 was the high, so I was right. Okay, so that's an okay move, given a 5K. It was back and forth. So it was one of those where you can decide to stick with it, take some gain, and see if you get re-dips back to the algo level at the 94. And that seems to be providing support right at this particular point. We'll see if that breaks down a little bit more when market players get to the action, and that won't be too long from now. So all in all, good stuff. And still, we're right on with exactly what the expectations are. When I say expectation, I hesitate a little bit simply because the expectation being, though, that yes, we had this retrace set up. Did additional factors affect this potentially? Are things still in decent condition? They are, but that doesn't mean that with the potential fear element of growing conflict, you certainly could see any of these lower levels hit without any trouble. So I think it's one of those we just follow where the money goes, and that we're going to see that on DOC readings shake out. Stick with your readings. As always, though, trade well. I will put up any interesting or new charts on the Skype chat. Have a good one.